Greetings, Dr. Jeffrey Scott here, and this is my weekend market update. I titled this week, Are U.S. Markets Poised for a Sell-Off? My email address is hgsidoc@gmail.com. I welcome remarks either via email or in the YouTube remarks area, um, especially if the remarks are constructive. If you are new to my channel, please hit the subscribe and the alarm so you know when I post these. I post them every weekend. I just don't know if that means Friday night, Saturday, or Sunday, and that way you get notifications. So, very interesting week that we just finished. We knew going into it we had major earnings. We had Fed meetings, fallout. We had economic numbers. But what we didn't know is we'd also have a credit downgrade. So, if nothing else, it made for a really interesting week in the market, and for an interesting weekend. This is for educational purposes only. Any recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. I now have a number of tools that are available for sale, some through wealth charts, and some I will be presenting in a launch webinar tomorrow. I pay for all the tools that I use, and trading involves risk, and you alone are solely responsible for any investment decisions you make. I do post a video. It's pretty much a wealth charts video of what I think is going on in the market. I love that tool. And at stocksanddocs.com, it's usually about 8 to 12 minutes, sometimes a little bit less, never longer. And I post it at around 9 o'clock most mornings. If I'm traveling, it's a little tough to post it. Sometimes I'll do the video late the night before, so it may not always be up to date with the current futures, but hey, I'm a stock trader. I'm an end of day swing to position sort of trader. I don't normally care what the futures are at 4 in the morning. Major markets tell the story, and we could see here at the top, the major markets were led to the downside by the NASDAQ minus 2.8, the Qs at 3, S&P 500 minus 2.2. That was one of the reasons why I love wealth charts. TradeStation does that to me all the time. The NYSE composite was down minus 1.8%. So you could see it was a weak time in the market. And there's the Russell minus 1.2. So 5 days was weak, and so was Friday. Interesting is we are right up against 52-week highs, and you can look in the next column over the current interval from the 52-week highs. So all of them are still within 4.1% of the highs. And over here, when you look at how far they are from the 52-week lows, which occurred on October 13th, you could see the only one that's not technically still in a bull market above 20% is the IWM. You could see on the sectors below the 52-week high, real estate and utilities are the big ones, minus 18 and minus 19%. This is a Q Edge tool. It allows me intraday to get a sense of what's working, what's not working in the market. And you could see nearly a 50-50 split on Friday of sectors, industry groups 60-40 to the red, and stocks a little bit more than 50-50 to the red. This is not a strong market, but it's also not a horribly weak market. If you look here, you can see 53% of the stocks are below the midline of their Bollinger Bands. Pretty neutral. And if we look down here to see what decile within those Bollinger Bands are below to the left and above to the right, and it looks like there's more below the Bollinger Bands, as it says, than above, more below the median than above, but it's still a pretty symmetrical pattern, so a neutral pattern. If you look at the market, the one-day returns, you could see communications up 2%, healthcare, energy were up. Actually, if you look for the one day, Friday was 6 out of 11 were up. So despite the fact it was a mildly negative day in the indices, if one looks at the S&P 1500 sectors, 6 to 5 positive. Now down here, if you look at sectors, industries, and stocks over the 5 days, you can see it was a tough week. 91% of the sectors were down on the week. Only one was up, and I think it was energy. Most industries were up, and two-thirds of the stocks, most industries were down, and two-thirds of the stocks were down. So not a great week for the bulls. Again, this is, I introduced it to you last night. It's not my, last week. It's not my product. It's Nick Drendel's product. StockTricksWithNick@gmail.com. This is just one picture. It's really a great spreadsheet for tracking positions. But, it sits on one of my monitors, which is what I told Nick in an email, because it gives me a sense during the day of where some of the major indices are, where they are in their range. Are they at the top, strong market, or bottom, weak market? You could see the markets opened up and closed negative. That's not a good market. You could also see that over 5 days, the only positive industry performance listed here is the oil, gas exploration and producers, energy as a whole. So really was a tough week in the market. If we look underneath in white, you can see the 10-year, over here the 30-year, and now we're starting to see a separation between rates going higher and finally the markets rolling over. So we'll see if that continues. Fed raised, we know, in the last meeting, and we had the downgrade of debt, which might cause rates to go higher. We had a big supply of bonds needing to be refinanced. That can cause rates to go higher. And then we had economic news that was probably favorable for those that don't want to see the Fed to raise again. But the economy is strong enough that I don't think it's a deterrent if that's what they need to do to get a hold of inflation. So a lot of things probably pressuring rates to go even higher. I've got a question mark there because it's almost, you get the feel now that the economy is just so resilient that maybe we don't have a recession. And I tried to think of, do we ever get recessions, or do we ever expect a recession in normal circumstances in the third year of the presidential cycle, which means the entire House is re-elected next year or up for election next year. A big part of the Senate is up, and so is President Biden. So you would think that as we get towards the end of the third year, the incentive for those sitting in government jobs is to spend and prevent a recession. I bet the recession gets pushed out to after the election, after the new president or the current president takes a seat again. I don't think we're done, but I don't think it's imminent, and so I don't think the markets are paying any attention to it, which they shouldn't. Breadth, if you look stocks above the 200, stocks above the 40, both came down modestly from fairly extended but not hyper-extended areas. My favorite extension, the 21-21, the 12-week new high or 13-week new high, new lows, is in a neutral area. So there's really no single here. The market breadth has eased as the markets fell. The buckets, this is an edge rater version of what I showed you in the Q. You could see no big pattern here that's spread out nicely, and almost a 50-50 of stocks above and below the midline of their Bollinger Bands. Would not expect a Hindenburg, especially now that we're off the highs, but I do notice there's a bifurcation, a difference here. The NYSE has no new lows greater than 2% going back until June, and you can see they continue to have new highs, and we're flipping on the NASDAQ to more new lows than new highs, and that's not a positive sign. And then this surprised me because with the markets down, and some of the markets down a lot, I looked at this pattern and I said, kind of flat. Now you have patterns here showing that an ERG is EPS rank plus relative strength rank plus group rank, and to the right would be high ERG or high growth. to the left would be low earned. And you could see, as a rule, we're down about minus 1%, but we got some peaks and valleys. The interesting thing is when you look at performance versus earnings rate, there was no improvement based upon good earnings. If you looked at relative strength, those stocks with the worst relative strength are the ones that had the big bounces. Some of these beaten up stocks, perhaps something like a Fastly. And look at this is not what you want to see in a healthy market environment. So junk off the bottom as market reacts to earnings. And now we got a really doozy week coming up. The Fed embargo must be over because I got Fed heads talking on Tuesday. So now will they talk back the markets and talk up rates? I think that the risk of another raise was the November market was like 30% or less. I bet the Fed starts talking up more rate hikes is my guess. That won't be great for the bulls. And then we got Thursday and Friday, we got jobless claims, we got CPI. Friday, we got PPI and some sentiment. I think that the market may tread water for the first couple of days. I think tread water with a tendency to drown, go down. And then I think we'll see what happens with CPI and PPI because now you almost want Goldilocks. You want it to be just right. You don't want it to be too strong because that says the Fed has to make more hikes. And you don't want it to be too low because that would say the economy is slowing. And we certainly don't want any more surprises with ratings agencies cutting the debt at this point. Another big week of earnings. Just looking from sitting back. Palantir, one of the darlings on potential AI activity, has earnings. Lilly, I love them. They make Mounjaro, the drug that allows me to lose 50 pounds without dieting. You probably are seeing a lot of stuff in the press. The market opportunity for Lilly and Novo Nordisk, and there's a host more to come, so it's not just going to be them, of a shot you take once a week that can lose up to 22, 24% of your body weight with, for many of us, and myself included, very few or no side effects. And that market's probably $80 billion and still not tapped. So I think it'd be very interesting to hear how they're dealing with Mounjaro, both from a shortages as well as what looks like pressure on payers not to pay for it because it's a lifestyle drug now. Looking through CyberArk, one of the premier cybersecurity stocks. There's Novo Nordisk, the other stock that makes the diet pills. They make Wegovy and Ozempic. Ozempic commercials, and you should thank me for not singing because I have a horrible voice. So it's judgment call to hold stocks over earnings dates. It's just bad judgment to not know when your stock's earnings date is scheduled. If the market's before the open, you've got to make your decision before the close on the prior day. I don't have a lot of stocks I don't have a lot of stocks period right now, so I'm not worried too much about earnings this week. Last week was a busy one. Axosome is one that I'm in and out of. It's a stock that the analysts love with targets of about 200. And one of their drugs, somebody came out after hours on Friday and said they're coming out with a generic. Be interesting to see if it even moves the stock. I think the good news for them is they have a chance to defend the stock Monday morning. Just to remind everybody that I do these on a daily basis. And welcome to go to stocksanddocs.com. There is a place to fill out your name and your email, and you'll get my videos when they come out and notification of some of the live events that I do with Rob Hoffman, Become a Better Trader, and Wealth Charts. So, market thoughts. Big jump in long-term rates provide an excuse for participants to take money off the table in a short-term overbought market. So you had supply concerns. Continued relative strong data supports the view that the Fed is apt to keep rates higher for longer and may yet find reason to raise the policy rate again. Again, there wasn't a raise this immediate last couple of days, but I think we're still feeling the policy of higher rates and longer. That Fitch downgrade, that one hurt, especially if you have a big bond portfolio. The big two earnings were Apple, and I can't spell. All right, I fixed that. I couldn't leave it as the Apple ticker wrong. But Apple and Amazon had earnings Thursday. Apple's were a disappointment. If you look at their revenue, it's hard to see why they're the leading stock in this market. It's flat, and it's going to be flat potentially for another quarter. They dropped 5%. Amazon had positive on AWS, which I think was the most important, beat on revenue and earnings, and was up over 8% higher on Friday. This week, we got economic data, Fed speakers, and earnings, so there's lots of volatility come in. From a seasonality perspective, we've entered one of the weakest periods of the year. Markets are just off their 52 weeks high and likely will best tread water as we wait on the data. I said something, I send out a little, I have a very small list that I send out market notes to, and I sent something out Thursday night and basically to warn to beware of Friday afternoon. Some of the Northeast schools go back in the next couple of weeks. So, this is end of summer, and I kind of expected there'd be some low volume in the afternoon, people leaving to go off to the Hamptons or wherever they go with Jersey Shore. And I think we saw that, and I think it's possible that we could still see some modest volume over the next week or two. And low volume means high volatility. So to me, it's a good time to be raising cash and playing defensive. I did not say short. I don't think I have a signal to be short. I have a signal to be careful. Um, but I will tell you, when I look at 1,000 charts every Friday night, which means I'm a boring date for my wife. There were attractive longs and shorts. So I'm going to play some, but small size, tight stops and targets. It's a different market than it was 4 weeks ago. The cha-cha-cha bull market is at least taking a pause. All right, let's go look at some charts. So let me get out of that. And we're going to stick for this review in wealth charts. And we're going to start here with a 5-minute chart of the spider. I always like to look at that because it gives me a sense of what the market did. And what you could see, a gap up on Friday after the strong earnings that we had in Amazon and despite Apple, but Apple was down less than 2% at the open. It ended down close to 5%. So I think it was just the market sold off gradually the rest of the day with Apple. We traded up until about 1 o'clock, and then the market sold off. And, it sold off not an insignificant amount, a 1% from the high. So I think we have a little bit of concern about what we're going to get this week. If we look at the little box that I had put where I captured 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, not just 11 days within this box, but within the bearish engulfing pattern. And we broke out on Wednesday. Thursday we had a green candle, but we're still down on the day. And Friday we were down 0.5% on the spiders. Not a very attractive, bullish looking chart, but it could just be a pause to refresh. And perhaps what we're going to do is come down and tag the 50. The 50 is going to keep going up. So if we hit it in the 442 to 445 range and bounce, that's just another percent down. And that's my working hypothesis, is that this may be good support. If not, we've got the 420 area that we could not break above, as you could see in the past, and hold above, going all the way back to May of 2022. And that could be a place that we'll look at as well. So I think there's some short-term risk in the spiders. When I look at the Qs, similar picture. You got the 50 underneath. The next one is the anchored VWAP at the 2022 highs. The diamonds also breaking down here. This is a line that was similar to this red line, was an area that just seemed to be resistance for going back a while. So that potentially could turn to support as well. And then the Russell just struggled for quite some time to break above its anchored VWAP. And it did back here, and that to me would be the target. And if we go on a few more days of gradually dropping, you're going to get to the point where that 50 and that anchored VWAP are going to be about the same place. So I've got, those are my downside target ones. Not big moves, not short the market moves yet, but I'm going to be watching closely because you've got more support underneath each of these, but we're going to start to have to drop a little bit more to hit them. Um, on the commodity, on the VIX front, you could see the UVXI was up 13.8 on Thursday. It was up 4.06 on Friday. And if I look at weekly on the UVXY, you could see that weekly, I'll explain that look in a second, was 19%. This thing has so many reverse splits that, yeah, it flattens out. And that really is the problem with instruments like this, is they're really great short term for trading, but long term, um, you can see because of reverse splits and a fall as the market's been relatively stable, these things are horrible investments. And then the dollar, came back to ground, and now it's sitting, I think, at an important line in the sand here. This has been, the 50 has been resistance and it's been support, and we're sitting kind of right on that 50, so it'll be interesting to see. If the dollar continues to soften, that'll reduce some of my bear case, but I'm expecting the dollar, we'll see. If it bounces, not good for the bulls. On the commodity front, gold and silver got to get above their 50s. Here's gold and silver before they're relevant to me. Saudis, Russians, others at OPEC are extending their output cuts, and that's along with the dollar pushing oil up. And oil is getting to recent high area. As you could see, now we got to go all the way back to 2022 to get close to this amount. So oil will be a headwind for this economy as well. And remember, at some point, we're going to have to pay the piper and refill our strategic reserves. There were some thoughts that the reason why the Saudis and Russia tightened was because they were upset with the U.S. because they hadn't started to refill, which would have taken volume off the market and led to price increases. So they just took volume off the market with cuts. Think about it. The Fed is the biggest holder of debt. We got to pay interest on this debt. The higher the rates are, the greater those payments have to be for interest payments. And we're going to have to refill the SGR when we're broke and bleeding money paying our interest payments. I think there's going to be a lot of pressure coming from Washington on the Fed to start to moderate rates. And I think the first sign of any economic slowdown, you might see the Fed start to do it quickly. I think there's a big problem with the U.S. if we're going to have to pay our debt, the interest rates at this level. You could see the 10-year did come down on Friday, which is a positive for the markets if it stays down, just off the recent highs, and a high that goes all the way back to 2022. And if I put this on a weekly chart, just out of curiosity, you could see if this was a stock, you might even say you have a cup and a handle and a breakout. I think we have to watch and see. I don't think that we can say all clear on the rates just because it came down on Friday. And mostly probably because of the employment situation. Now, first thing is, from a high level perspective, my weekly timing system is still saying bull. Or at least it's saying don't be short. The green arrows are there because price is above the 30-period weekly WMA and because the weekly bongo is green. However, all of the bongos on a daily have turned red. And that has me worried that, at least for the short term, we might see further pullback. The bongos being my not it's not secret, semi-proprietary trending indicator that I developed under the tutelage of Ian with a bunch of friends a long time ago. So technically, I'm still in a buy mode. My conviction, very low. And I think it's important that, from a long-term perspective, it doesn't say that we're going back to the October lows yet. Who knows what it'll say a month from now. But from a short-term perspective, I don't feel the need to go out and be adding to my longs, except for maybe a couple targeted purchases on things that I'm looking at. But as I mentioned before, small size, tight stops. On breadth, I'll be watching for this to spike up, which is the TLT versus the spiders, and that would be when we see some economic risk. The next two, this is the equal weight RSP versus the cap weight spiders. The fact that this one, which is the spiders, this is the equal weight Qs versus the cap weight Qs, that both of these are starting to drift up is actually a positive thing, and it shows some broadening of the strength in the market. So we will continue to watch that. Um, if we go into the S&P 500 sectors, you know, last week we saw a nubbin of movement on staples, real estate, utilities, and healthcare. I would still say it's not that much of a move. I'd expect these things to move if we're about to go into a full-blown correction. Right now, we're just a mild pullback. So I will watch those. The leaders, last week we talked about energy and financials improving. They've improved quite a bit. Materials and industrials behind them. Discretionary still improving, even though technology has come back. So if I had to pick stuff, I'd be looking at energy, and then communications has just remained super strong. But energy and financials are sort of new compared to where they were a couple weeks ago. Now, I look at a number of scanners, but let's start with the heat map. And this is a heat map of the Russell 2000. And you can tell that the larger of the stocks, which would be the bigger boxes, are very red. If you come down and we look at the NASDAQ 100, which is technology laden, Amazon and AMD and Netflix, so some of the things were positive, while Apple and Nvidia, Microsoft and Tesla lagged, and Meta. And if I look at the S&P 500 to get a sense of a bit broader, again, Amazon, which was up significantly, and that's interesting. This is the right price for Amazon, but it wasn't up 1.35%. It was up about 8%. But it was a market that on the week was down, but there still were areas of strength. Wealth Scanner is my tool for trying to break down, is my go-to tool. Obviously, it's Rob Hoffman's Wealth Charts tool. But this is going to let me rank, in this case, a bunch of top-down laden ETFs and tell me what's working in the market. So, first look, if you've been on my Monday, or sorry about that, my mic turns off. I'm getting a new headset tomorrow, I think. Um, what I was saying is, if you're on my during the week sessions, I've noted how we've really weakened on the bullish things. And there's your energy, XOP producers, US oil, USO, oil ETF, short the bonds, pharma, construction, but notice the numbers have dropped significantly. And there's not much financials here. There's insurance and banks and regional banks, but they've dropped a lot. Now, if I flip this and I want to look at the bearish, what I have to do is change my score in a sec, the arrow there. Biotech has really been leading the market down, and you could see that biotech is just down at a horrible low here. Whoops. So you got biotech, you got TAN, which is solar as well. But gold, utilities. But to me, the most interesting thing here is the fact that the scores on the bullish ETFs have deteriorated so much. So as I go to look at some stocks, my thoughts are hard for me to be short in everything here because even though I saw some ugly looking charts, I think the market treads water, sells off later in the week, or goes up based upon CPI, PPI, and jobless. But I'm not expecting to make a lot of headway to the upside anytime soon. So if I go into the CAT scanner, the type of stocks that I like to buy are pullbacks and uptrends. This scanner was made for me by Wealth Charts. It includes a number of the things that are important to me. My dots are 4 impulses. One that's about gapping, one's volume, one's breakouts, and one's momentum. Over the years, I found that great stocks, before they make their runs, they start out at a base, maybe they're in a squeeze, and then those dots fire. Their relative strength versus the spider improves, and their OBV improves. And so I'm really searching for that pattern. And, the first stock on the list that comes to the top is AAOI, and this was a pattern that I saw a couple. And this is actually a beautiful looking pattern. It's a cheap stock. I think it's in the communication sector, which is partly why communications was up. But notice the pullback and then a breakout on massive volume, and all 4 of my dots, the gap, the volume, the breakout, the momentum. This here is a daily bongo. When it flips to red, it tells me it's in a downtrend. When the weekly and monthly bongos are green, I know I have an intermediate long-term uptrend. So this by definition is a pullback and an uptrend. It switched back to green. Look at relative strength and OBV. And this is a proprietary oscillator, my high-low jump oscillator. And at 84%, it tells me this can still run more. So AAOI looks interesting. AMC Networks is a meme stock. Actually, this is the one that's the TV set. It's not AMC. I take that back. I don't like the topping tail. I don't like the 200, so I saw that one and I skipped it. AMZN is a biotech leader, but you saw how weak biotech was. This is one I would watch, but I'd rather buy it when it breaks above the 200 because right now my working hypothesis is that this 200 is going to be resistance, especially in a market that feels heavy overall. The next one down was Amazon. What's not to love, except it's better to be in this one to be chasing it. Notice the red lines at 100%. I may turn out to be wrong, but I actually sold calls against my position at the end of the day Friday because Amazon does have a history of drifting down after a big gap up in earnings. And if this market is heavy, Amazon will come down as well. And if stock gets called away, I'll buy more stock. I have no problem with that. But what a great move. Again, I prefer that I don't see a closing at the bottom of the gap bar. And that's why you lose the dot over here, but massive volume, breakout momentum. I'm just concerned about extension there. ATSG, don't know much about this. Now the good news is it got above the 200. It had big volume. It had breakout momentum, but also at 100. I ignored that one because you're sitting right on the 200. By definition, in my mind, that's not extended. And frankly, the oscillator works in a trending stock, not something that is in between the moving averages. Again, I closed near the bottom of the line. It's one to watch. Probably not for me. It's not one I'm going to run out and get. B&G Foods, another big gap on massive volume. These are all earnings stories. All earnings stories. 66% beat. Big topping tail. 3 dots. Closed in the bottom, so we lost the 4 dots from the gap. And look at relative strength, OBV, and high jump. So if I go down the list, there are some things that looked interesting to me right here. One of them was COHR, which of course I don't see it now, but I looked at it before, probably right in front of me, but let's just pull COHR up. So Coherent is a communications stock, I believe. So why do I like this one? We are in at least an intermediate term uptrend, but it turns out if we go back far enough, we are in a longer term uptrend. As you can see, the monthly and the weekly are green. The daily had reversed and then went green. I had a breakout momentum on volume. I cleared the 17. I'm above the 50 and the 200. My high jump is not a problem. My relative strength's above that of the spider, and so is the OBV as above its moving average. That one looked attractive to me. Looking at the list, Netra or Natera, this one looks like some of the others, so it's big move up. But notice it's not extended. The relative strength and OBV signals are very strong. And then massive volume took out all the moving averages. That one looked interesting to me as well. So there are a lot of stocks to the upside. Now I have other scans. One of my favorite things to do is find stocks that are bottom. They've been on the bottom and now they're starting to give me some bullish impulses. And one was Gilead. But like AMZN, it's still got to clear its 200-day moving average. Notice it had a breakout momentum, had good volume, it just didn't have enough to trigger the signal. I have some that are rockets that have already had big moves, and some that we've looked at today, the ones I said were extended, are up here. DaVita is a healthcare stock. They run dialysis centers. Again, you see that little arrow there, a 25% beat on earnings, and that would have been a day or before. It probably was an after hours, and this was the response, just like Amazon. That one also looks interesting. So I said there were a lot of good-looking stocks. That was some of them. Now I could also go into my weekend review bears. So these are stocks that were made to my short list. You're going to see overlap, so don't worry if you see good stocks there. This comes from a series of watch lists and scans that I run, and I could look for retracements and downtrends, and there's a lot of them. ACLS has been a big high growth leader. It's breaking down. Is it ready to short yet? You know, the way I like to short, personally, I'd like to see stocks that have broken down. That's not what I want. I want freehand. Let me try that again. Have this break down, come back up, have the 200, the 50 do this, fail, and let me short it at this point. Right now, as I look at it, I gotta get rid of it. Actually, sometimes I should just leave them on. As I look at this, it's got a place you'd expect it to bounce, which is the 50, but a bounce and a breakthrough it and a fail to recover, that would be interesting. A couple of the trains looked weak, but sitting right above the 200, it's a hard place for me to short. Floor and Decor, this one is a big disappointment because you'd expect with strong housing that a stock that's mostly related to furnishings and things that you would do in a new house would be doing well. And this one broke down, but it's sitting right at the 50. Again, I'd like to see a fail and a retest. So that was a problem with a lot of the shorts. And if you look at Apple, my God, look at that move that Apple had. Now look at the move Apple had here. Um, so Apple started about low of like 124. It got up to 198, and that was since January. So that's 70 points out of 120. So that's a 60-70% move it had. So not a shocker. Now, this is ugly. And could Apple go all the way down to 200? I certainly hope not, because I think if it does, that says bad things for the market. And if you just look at Apple, they missed earnings by 5.88. Actually, they beat earnings by 5.88%. But I think the concern was look at the growth rate, previous $1.20 to 126, and some of their headsets and other numbers. So when I looked at, I'm just going to go through a watch list very quickly. There's going to be a lot of stocks that I put on my buy watch list, but it's just a watch list. These are stocks that looked interesting to me for one reason or another. It doesn't mean I'm going to be buying them. This one seems to. This is one, we looked at the same pattern on a number of stocks, taking out the 200, um, three green dots. So it's got breakout, momentum, and volume. Relative strength and OBV look good. For whatever reason, CME, that's a breakaway gap looking thing till proven otherwise. But boy, is this in a run. Now, wanted to show you this because I want to find the stock when it's here. Okay? And it broke above the 17 and the 50. That triangle is another one of my signals called an EMS. But notice it's got volume, breakout, momentum coming out of a squeeze. That would have been a time to buy CME. I don't think right now. Um, but what I run is I try to get 50 or 60 stocks that I put into a radar screen and trade station, and those are the ones that I watch at least on Monday. Here's the CBOE, another one of these market data traded, these, these big, I don't know what exchanges, and they're doing very well compared to the markets themselves. Hudson Tech, it's not Hudson Properties in New York, is an industrial play, had a big move and didn't do much. It was down 3.39 on Friday, but this was after a 26 move on Thursday. Look at the volume there, and it's not extended. It was coming out of a recent squeeze. So there are some things here that I like. I won't say there's a lot of things here that are perfect. There are things I'm going to watch. One I mentioned, I think, on my Friday morning video was Fastly, and I still like Fastly. In fact, I nibbled on some. And Fastly was one of these stocks that is way off their highs, as you can see right here. And if I look down here, you can see earnings, were not great, but the response to earnings was a gap up and a big move up on Thursday and a follow through on Friday, which is pretty interesting considering the market we had. To the short side, I have another list as well, but I'm not saying that any of these are ready. A lot of them, like we can look at McDonald's. Um, you could almost argue that we failed to retest and we're breaking down and we're going down to the 200. Um, David Elliott, may rest in peace, used to call this an ice hole failure when you failed to take out the 50. And when that happened, is you're typically going to run down to the 200. So there are stocks that are rolling over, and some of these are pretty big names. These are also the first stocks that might rally. Would I short Nucor here? No, I wouldn't short Nucor. Nucor, it's a big leader. But it's interesting, it broke down here. Let's see what it does. So as much as anything, it's sort of a screen to give me a sense if this market is breaking down further. So those are some of the names I'm watching. Now, a lot of folks want to just hear about the big market leaders. I do that. I mean, I have a list of high relative strength stocks. But at the end of the day, I'm going to go to my CAT scanner. I'm going to pull that list of high relative strength stocks up. These are the ones that have been big leaders, outperforming. And I'm going to run them against my pullbacks and uptrends. And I'm going to see if anybody has more than one dot. And there were a couple. Cloudflare, but I looked at the chart. I'm not convinced. It did break out, but it closed near the bottom of the day. Worth watching. And Progeny, don't know what it does. A nice move, except a close weak. So these are things to watch. I run this test on a daily basis. Remitly had a big earnings day on Thursday. You can see on Thursday they missed their number, but actually their surprise was positive because instead of losing 16, they lost 11, and the market rewarded them. So a lot of names because it's Sunday or Saturday night going into Sunday, still done in 45 minutes. I think this is a week to be careful. come check me out on Stocks and Docs. And I've reproduced some of these tools because of requests for TradingView and TradeStation. They're all independent programmers, and if you have interest in that, hgsidoc@gmail.com. Um, I love wealth charts, that's why I'm using it, but I know a lot of people use some of the legacy tools, and hey, so do I from time to time. Take care.